Good morning, everybody. Happy Monday. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And we have a big rally on Wall Street that the markets look to open up basically 4% on the NASDAQ, over 3% on the S&P. Now, interesting price action here, and I'm going to tell you why. In fact, let's jump into the S&P futures. Let's take a look at what we have here. So remember, on Sunday night, the S&P futures open up at 6 p.m. Eastern time. Now, on Saturday, we had already heard that negotiations were a total reset, quoting that, total reset of relations with China and the U.S. And again, if you go back to Friday's game plan or even my weekly roundup, I talked about how the big thing this weekend were those meetings and negotiations. So what we saw is after that happened, the markets had a gap higher on the futures right here, and we basically traded sideways. And then once we got to 3 in the morning here, the S&P ripped higher when basically Scott Bessent had a press conference, right? And basically, remember, they were over, I believe, in Switzerland. So that was the Switzerland time of day for our, obviously, overnight 3 a.m. Eastern time here. But basically, negotiations reached a point where tariffs were reduced basically by 110%, I believe, across the board. That brings essentially the U.S. to about a 30%. I think it was 115%. So the U.S. still has 30% tariffs on China, and China reduced their tariffs to something like 15 or 10%, something like that. But suffice it to say, this is a huge de-escalation. Now, I think it's important to understand is that the markets have already rallied significantly higher. So the markets were kind of anticipating some deals. We saw the UK deal last week. Now we have this big one being the China deal. But this is the kicker, folks. This is not an official trade deal. Please understand that. There is no official trade deal. All it was basically a ratcheting down of tariffs, reciprocal tariffs, that basically said, hey, listen, we're going to negotiate for the next 90 days. And if we can reach an agreement, we won't put these back on. If we don't, these tariffs may go back on each other. So I want to be clear on that, because I think, again, the markets are having this robust, monstrous rally today because, needless to say, it's great to see the tariffs being reduced. But at the same time, there is no specific trade deal. And essentially, it's kicking the can one more time down the line of 90 days. Remember, this happened with Europe. Remember, we slapped on these big tariffs on Europe, on Vietnam, on Thailand, and then the markets collapsed. Yields went through the roof. And then the president came and said, you know what, wait, we'll reduce these back to just 10%, but we have a 90-day window to negotiate trade deals. So far, we only have a partial trade deal with the UK. All right, so flipping back to the markets, this is where that occurred at 3 in the morning. Look at the massive spike higher on the S&P futures, and we've basically been trading sideways. Now, look at this zone up here. See this area? I'm sure a lot of you guys have noticed it. Where is that coming from? Daily chart. Look at this, guys. This area here, this area, this area, this area, and then even this area right here. So what this tells me is that we are now into a very significant area of resistance on the S&P. Now, remember, we had filled the gap right here, and we had consolidated and pulled back, floated back up, and now they're gapping us above. If you've taken the methodology or you know the Gareth Soloway methodology, that's called a river theory, where they can't get through the line of resistance, so they gap it above, and then it kind of clears the way for another move up, which is where we are right here. But this now becomes your next big area of resistance on the S&P 500, or in this case, the E-minis, the S&P futures. All right, now if we get through here, there'll be a little subsequent resistance right in this area, just below 6,000. If we get through that, we're talking about potentially going back to all-time highs. And again, as a technician, this is all I care about right now. If we get through here, then I care about this level. Now, basically to describe what I did today, folks. So what have I already done in terms of trading? I've already added to some shorts that I have out there. So again, remember, I dipped my toe in the water. Remember when the S&P filled its gap at that key level, just around 5,700. I started by dipping a toe in the water on a short trade on the S&P. Now I dipped another basically toe or two in the water, continuing to dollar cost average into this market on the short side. And a couple, you might say, well, why? Well, number one, there's no trade deal. Number two, there's already damage to the economy. Number three, inflation is still elevated and the Fed can't really cut rates. So there's a lot of headwinds that I think investors are getting irrationally exuberant over the positives without really looking at the negatives. And again, my job as a technician is to look at the charts and the levels, but also human psychology. And if you look back at the S&P 500 here, what do we know? When was the time to buy? When there was fear and panic, right? Well, now you're getting euphoria. And again, euphoria could continue up here, but essentially euphoria starts to be where I want to start going counter to the general public, right? That's where you want to start to think the opposite. So when everyone is screaming on X or on other social media platforms or CNBC is robustly bullish, you want to start saying to yourself, wait a minute, let me take note of that bullishness, that kind of irrational bullishness, and maybe be a little bit more cautious. And also keep in mind that the markets have rallied so significantly, right? So again, the markets have rallied so significantly to the point where the S&P futures to the high of this morning were now up 21%. That's the equivalent of a new bull market, folks, right? So, I mean, we've basically gone from a bear market to now back to a bull market in a matter of essentially a month, which is pretty incredible. All right, looking at the NQ, which is the NASDAQ futures here. The NASDAQ futures setting up to have a robust rally higher, up 3.82%. But notice where we are. This area right here, right? So again, for my game plan today, and I call this the game plan for a reason, right? My game plan today, when I get in the live day trading room, it's going to be scoping out stocks that are gapping up significantly, but into multi-factor resistance and shorting into this. Now, again, remember, these are short-term day trades, so we're just looking for a pullback. But essentially, there are a lot of names out there where if you look through, you're seeing ups 5%, 7%, 10%. I mean, even Tesla, I'll go over Tesla this morning, it was up 8%. Apple's up over 6%. I mean, these are huge moves if they come into key levels, right? You don't just say, oh, this stock's up 7%, right? You don't just say that. But if it's up 7% into a multi-factor resistance, now probability is in your favor for a pullback. And that's really what we're looking for here on the trading day. All right, so the NASDAQ futures, again, up into this level. Big gap up this morning on the NASDAQ when we open in basically 23 minutes. Now, this is concerning. Take a look at this, guys. Remember how I was talking about how we were in this bullish consolidation and this downsloping line, which we broke out and confirmed, now became major support? Well, look at the 10-year yield. Just like that, the 10-year yield is spiking today again, now for the third update in a row, and has broken out of this little parallel here to the upside. It didn't confirm on Friday. It certainly at this point looks like it will confirm today. So what is that telling us? It tells us that the problems are not over. If inflation was coming down, these yields would not be going up substantially, right? We wouldn't be seeing that. So it's partially the fact that trade can start again between the two countries, between China and the US. That's good for economic growth. So that helps push up, potential expectations of inflation. But it's also the mere fact that there's still tariffs left on the board here to the tune of about 30% for the US on China goods that will have some impact on inflation. And that's going to make it harder for the Fed to cut rates later this year. Now, remember, last we looked at the Fed Watch tool. The Fed Watch tool was telling us that there was no cut expected in June, but a cut in July. We want to monitor that very, very closely in the coming weeks or so to see if that changes. Okay. All right, so on to a couple stocks here. Apple, look at this gap up on Apple, guys. This is where we closed on Friday, gapping substantially higher. There'll be a small day trade short right at this pivot high at around 214.50. On a swing basis, I will start to nibble on a short if we get up to 224. I don't expect that today, by the way. That would be incredible if Apple got up there. But again, double top right here, this little pivot high at 214.50, day trade, and then I'll start a short position here at gap fill, big gap right here from the gap down there. That would be a potential swing trade. NVIDIA has been kind of struggling. I mean, it has bounced off the lows, but compared to a lot of other tech stocks, it has lagged behind. It is getting a boost today. Short-term resistance is going to be this little pivot high right here, which we're just about to. It's around 122.75. I'm not sure if I'll short this, considering as beaten down as it is as a day trade in the live day trading room, but I will keep it on my radar. Tesla today, we had this upsloping trend line. Looks like right now we're going to be gapping above that line. The question is, can we get through the next point of interest? There's a big level right in here, right around 330 to 331 right in here. So you guys see this pivot low here and then this flat bottom right there. That should be resistance. So that's going to be a level today where I am watching. Right now we're at 321.42 on Tesla. If it gets up to about 330, that would be a level to potentially do a day trade short on. Now, what about a swing trade? Is there any sort of swing trade that I see? As of now, no, but I would say this area, this 380 level would start to get my attention right in here. The chart would be very extended. And then I also want to go to my fibs and just see if there's any level that coordinates with. And lo and behold, look at what we have. The 618 right here. Okay, so the 618 right there basically coordinates with that 380, 385 area right there. So that to me would be a dual factor swing trade short, but that still leaves a lot of room for Tesla to run to the upside. And just to be clear, guys, I am neither a bull nor a bear on Tesla. I'm neither a bull nor a bear on Apple or NVIDIA. I'm a trader. And so basically what that means is that I don't care if something falls sharply. If it falls sharply and comes into multi-factor support, I become a bull for a bounce. And then I go back to neutral. Once I get my bounce, back to neutral. And if a stock goes up precipitously, like super high, like let's say Tesla goes to 380, 385 in the next week or two, then I become a short-term bear and I short it. And then when it falls, I go back to neutral. And so I want always to reiterate that, because I think some people are like, oh, but I love Tesla. How could Gareth be bearish on this at that level? It has nothing to do with it. It has nothing to do with my long-term views on any one stock. Stocks for me are interchangeable. It's the hot stock that I'm trading today. Tomorrow, I couldn't care less about it. And that mentality is very freeing for us as investors, because too many people fall in love with things, right? I mean, think about crypto and falling in love with a specific altcoin. And these altcoins are generally down, I don't know, 90% from their all-time highs or 80% from their all-time highs. Use them as vehicles. And I always stress this, guys. There's no company, no coin, no anything, no even government is really going to be in love with you enough to care about you specifically. I know that sounds rough, but it's the nature of the beast. And so you shouldn't care about it. Like, you're not going to see Elon Musk or Jeff Bezos or anyone being like, well, Johnny over there, he really loves me, so I'm going to make sure my stock goes up more just for him because he needs to get out of his trade. No, they don't care. They're doing what's good for the stock, and the market generally, and stocks move on other things. So you need to do the same. Don't care about any one stock. If you like it, have factors and reasons, essentially a thesis to say, okay, I like a stock because of X, Y, and Z. Therefore, it should be valued up here. Okay, that's fine. But if it gets there and the valuation is complete, don't get caught up in the hype that says, oh, but I saw on Twitter or X that someone says it's going to $1 million. Well, I'm going to hold on for that. No, that's hype now. And that's a different story. All right. Sorry for the little lecture there, guys. But for me, I honestly have to remind myself of this stuff all the time. So I think it is very helpful. All right, let's flip over to gold, guys. Gold is taking a beating today. I told you last week that I re-shorted gold by buying the GLL with Smart Money Commodity members. I did take profits this morning, over a 10% gain on the GLL. So congratulations. We shorted right into this retrace. Remember, in the game plans, I said, guys, this is your dominant force. It's a topping tail. It's a bearish reversal signal off of a parallel trend line that goes back to 2011. Look at the lows, look at the highs. Therefore, this rally that we saw kind of early last week, that rally was not a new bull market until it negated the high right here, and it never did. Therefore, you short into it. We made a good money. Now, you might say, well, how did he make 10% on gold short when gold only fell? All right, so gold, let's do a measurement here. Gold only fell, 5 and change percent. The answer is the GLL. So I bought the GLL, and the GLL is a 2 times. It's an ultra short. See up here, ultra short gold. And so by that, I got 2 times the exposure to the move on gold. So if gold falls 5%, I make 10% by being long GLL. And there's a lot of ETFs for this stuff. I don't use double and triple ETFs for very volatile assets because it's too risky. But gold honestly is not. I mean, if gold goes up 1 or 2% in a day, that's pretty big for gold. Lately, it's had a few 3% moves. But the point being is that for things that aren't so volatile, I'll use a double ETF for a swing trade. Things that are super volatile, I'm not going to mess with in terms of that. Like for instance, the VIX. I'm actually eyeing the VIX for a potential long trade as a swing trade as it's coming in sharply today. Look at this. The VIX is now under 20, guys. So for me, the VIX is so volatile. Anytime you can have a move on something like the VIX, and by the way, the VXX is the single, but here the VIX went up 250% in basically 2 weeks, right? So why would I ever want to risk that if I'm wrong, if something can go up that much and you play a double ETF? You know, people always think, well, oh, but I could get rich. Yeah, but think about the other side of the coin. Well, I could also go broke. And that's the one that keeps you safer and actually builds real wealth. So the point being is when you have something like the VIX, the VXX is a one-time. They do have, I believe, 2 times and even 3 times VIX, but it's like you're just asking to go broke, in my opinion, when you play really volatile things with double and triple ETFs. Just my 2 cents on the matter. And unfortunately, I can speak from experience. Early on in my career, I didn't fully understand double and triples, and I definitely made some errors and took big losses because of it. And I learned the lesson the hard way. And again, I always say to you guys, my hard lessons of major mess ups hopefully are your gains, meaning that you hopefully can avoid some of these errors that I have made. Listen, you're going to make errors. Everyone makes errors. But can you maybe make a few less because I'm talking about them? That's my hope and that's my dream, honestly, of these game plans. All right, let's go to silver real quick. Silver had a bullish pattern on Friday, a little bullish consolidation. It's honestly not doing much today. Although I will say just the mere fact it's flat is good when gold is down significantly. The question is, can we get a breakout here to the upside and basically another breakout up here? The chart to me still looks bullish, though, on silver. I still like the silver chart. Bitcoin had a great rally over this level here. Again, big break to the upside. Now, basically, it's stuck in a pseudo no man's land, meaning is it going to pull back to this level here, right? Or is it going to continue to rally up there? And it's essentially equidistant. So that's the question that we have right now. I did take a starter toe in the water position short on Friday, right in this area, right down here. So I'm kind of watching this very closely. But the scenarios would be a pullback and then this becomes support or a continued rally up into resistance at 113, 112 to 113. Essentially, if we get to 112, 113, I add to my short position. That should be a huge level of rejection. And listen, it's very clear. So there was a period over here on Bitcoin where I was saying to myself, man, markets are collapsing and Bitcoin's holding up. Maybe Bitcoin's a safe haven asset. Well, very clearly, Bitcoin has continued to perform with the stock market. So listen, I still think it's if you had to differentiate it, I would say it's 20% safe haven, 80% still risk asset. Now, over time, I think it goes to 30% safe haven, 70%, risk asset. Then it goes 60-40, then 50-50. Like over time, I think it shifts more and more to a safe haven asset. But based on the price action, it's very clearly still mostly a risk asset as the markets have done so well. And Bitcoin has also had a monstrous rally here. All right. So that's where we are. And by the way, just a heads up, I did unload the rest of my altcoin longs this weekend, and now I'm slowly accumulating shorts in smart money crypto. If you're in that service, you know exactly what I have done recently. Okay, next up, let's take a look at oil. Now, oil is rallying. Remember, oil going up here today. Why would that be happening? Because essentially any positive deal between China and the US, even just cutting tariffs, essentially means that there's going to be more economic activity, and then the forward expectation of oil demand increases. I'm patiently waiting on this. If we can get into this level finally, 65 to 66, I'm going to short it. And that, again, should be a significant resistance, okay? So just a heads up there. And then natural gas was so close to my shortable level up here, folks. Let's take a look. You can see this little trend line right here, and instead it's pulling back a little bit. So I still haven't entered any sort of position here on natural gas, long or short. And by the way, generally I trade these with all ETFs, right? UNG is the ETF for natural gas. Silver SLV is the ETF. And so even oil, USO, right? So a lot of you guys might be saying, oh, but I don't have a futures account. I can't trade oil. That's okay. You don't have to trade it, but there are ways via ETFs to be able to trade. All right. Flipping back to the S&P futures here, you can see they haven't done much since I began the game plan. I am going to jump off here, guys, and get to my trading room, the Apex Live day trading room with all my other traders in there. By the way, we have daily and weekly passes if you just want to come in and see what's going on. The knowledge, in the very least, even if you don't do any of the trades, the knowledge alone in there is unbelievable. We have about 4 or 5 traders in there that are all scanning, looking for trades. We give our exact entries, our exact exits. We talk about the markets. It's pretty incredible stuff. So feel free if you want to just try it out. Let's say you're on vacation for a day or a week. Feel free to jump in there. The education alone is worth it. And if you do decide to take any of the trades, hopefully they work out. Generally, we have about an 80-85% success rate. So it's pretty solid. All right, you guys have a great one as always. Thanks for coming out. Thanks for supporting me. I'll keep you guys posted. Take care.